Hello traders, here. This is Chris Capri with SecondSkiesForex.com. Today's video is part of a three-part series on how to identify key support and resistance levels. Now, we're going to be, in today's first installment, we're going to be talking about how you need to kind of change tactics, step back a little bit, take a slightly different approach before you use the traditional methods for identifying key support and resistance levels. Then we're going to talk about one type of price action trends you need to watch out for, the context, how you identify the context, and how you choose different levels based on this type of context. You've probably seen a lot of articles on how, the market reacts to a level, time spent at the level, number of touches, all these types of tactics in terms of how to identify key support and resistance levels. Those are all useful tactics and totally valid methods, but they are one step ahead. We actually need to take a step back and start with something before this, and that is understand the price action context, particularly in relationship to the type of trend or environment we are in. If we are in a range, then we have slightly different methods for looking at support and resistance levels than if we were in a trend. So we're going to talk about the first method here, which is one way to identify a trend. There's a couple ways we identify types of trends. We're going to talk about one type of trend, how we identify this type of trend, and then what levels we're looking for and what strategies we're looking to trade based on that type of trend. Let's talk about this scenario. I actually wrote an article on this about how to trade price action trends in Forex. You can look for this on my site. I'll also leave a link available in the description and in the video. But in this, I talk about the various types of trends in the market and how you need to be able to identify the different types of trends. That will determine what strategy you are using. There are two basic types of trends in terms of how I classify it. There are what are called volatile trends or non-volatile trends. Another way to look at this from an order flow perspective would be highly imbalanced trends and balanced trends. For this video, we're going to be talking about volatile trends, which are slightly imbalanced trends. Not highly imbalanced, but slightly imbalanced. What do I mean by that? A highly imbalanced trend from an order flow perspective is one where the order flow is heavily skewed to the buy or the sell side. So much so that one is so dominant, the counter trend players don't really show themselves in the market, so they just get run over. Now, if you think about this, what would that look like from an order flow perspective? That will look something like this leg down here. It's almost all bear bars the entire time. We have a little bit of presence of counter trend players here and here, a little bit on the wicks here, but it's highly dominant and highly imbalanced. That's a non-volatile trend. The order flow is so dominant on one side of the market that counter trend players never really take control of the market on a candle by candle basis. For this video, we're talking about now a volatile trend. A volatile trend is where there is a greater presence of counter trend players. It's less imbalanced, but imbalanced enough for a direction to have control. With that being said, what does that look like? It looks something more like this, where we see a lot more blue bars, we see greater pushbacks, we can see kind of, it does sell off, but then the market pushes back deeper into the trend territory, sells off, market pushes back deeper into the trend territory. That's a volatile type of trend. Now, how does this relate to us identifying key support and resistance levels? Well, if you think about it, if the market is in a volatile trend, well then we have to understand, since there are greater or more counter trend players present in the market, we have to understand that the market's more likely to have a deeper pushback or pullback. And so if the market is going to have a deeper pushback or pullback, then what's the strategy we want to use? We want to be using pullback setups to get into that trend. Breakout pullback setups. We don't want to be trading pure momentum breakouts. We want to trade breakout pullback setups. These are pullbacks to key role reversal levels. Now, how do I identify a key role reversal level in a volatile trend? What I'm looking for is a key swing point where the market creates a pretty solid counter trend move or a good pushback. Once I identify that level, I'm going to look for the market to kind of react to it again and then eventually break through that level. Now, we can see that the market does this on this key swing point over here. We see several closes right above it. When the market breaks through this, then as it eats through the bids here, once it breaks through this, then the sellers should be in control And to enter that trend, I can trade a breakout, but my more ideal or preferred method will be a pullback setup. So I'm going to be looking for a pullback setup to the level. And so as I move along, I can see that the market pulls right back to it, closes on the level. If the bulls truly are in control, they should bust right through this. But look what happens. The market stomps on a dime right at the level and then sells off to the prior lows here. Now, think about it. Why would that happen? This is because the sellers still were in control of the market and they considered this a role reversal level. That's where the level was viewed as having a role of support, and now it's resistance. So support here, and then now it becomes resistance, hence a role reversal level. Now, there are a couple ways you can enter into that, but for the purpose of this lesson, if we're in a volatile trend, we're going to be looking for role reversal levels. These are the key levels we're identifying. So instead of just choosing levels that we think the market is going to reverse, let's look for levels that we think the market will continue the trend on a pullback. This helps us build our skill set for identifying key support and resistance levels. Now, if we think about it, here's another key swing point. It pushes back, bounces again here. So I mark the level again. I say to myself, hey, I think this is going to be a key support and resistance level. What am I looking for? I'm looking for the market to break it. It eventually does. And then I'm looking for the market to pull back to it, and boom, it does. It comes right back to it and then sells off. So this is a great way to practice your skill set of identifying key support and resistance levels. But we're doing this in a very particular context. This is called a volatile trend environment. So when we identify volatile trends, now we know what kind of levels we should be looking for. We should be looking for key swing points where the market starts to push back counter trend, and then we look for role reversal levels for the market to break through that, pull back to that key swing point level, and then continue with trend. By practicing identifying these, you're building your skill set to identify key levels in the future. And that only enhances your ability when you're trading live real time. So this is the first part of this series of lessons. We'll do one on non-volatile trends in the next lesson. We'll talk about ranges in the third, and then we'll talk about how you can use Forex Tester 2 to practice and build your skill set, accelerate your learning curve for identifying these key support and resistance levels. So I hope you enjoyed this video. If you want to find more free articles, videos, or our daily market commentary, check us out at secondskiesforex.com. We also have a price action course where I do daily market commentary, where I go over key levels, identify the types of trends, what levels and signals I'm looking for. A lot of fantastic members in there, advanced members sharing their trade setups. It's just a fantastic environment, a very interactive course. And so for those of you who want to join the course as well, take your trading up to the next level, feel free to check out our advanced price action course. I will see you soon for the next one. Until then, good luck trading, everyone.